mortgage and loan sales and vulture funds. Since 2008 and the financial crash, banks have been trying to sort out their loan books. Since 2015, there has been an immense amount of activity in terms of loan sales to vulture funds. Basically, the banks are selling what's called NPLs, non-performing loans. Non-performing loans can arise from cases where there are arrears, sometimes severe. Our record case so far saw 18 years of arrears, and/or it can involve covenant breaches. Typically, these arise when a property goes into negative equity and the loan to value is in excess of 100%. The banks were pushed into this process by the various central banks, especially those in Cyprus and Spain. We've also seen in the market immense consolidation of the banks, and there are very few cajas still in existence. That's the sort of granular detail in terms of what has happened over time, but now we need to look at the practicalities of how to deal with vulture funds once the loan sale has been made. In the event of a loan sale, the vulture fund takes full control of the facilities and/or mortgage and also the security pertaining to it. They buy at a discounted rate, and many people ask us, what rate did they pay? That is completely confidential, and we will never find that out. It is, however, dependent on how bad that loan book is and how many covenants have been broken in terms of the NPLs discussed. The main differences between dealing with a foreign bank and a vulture fund are: 1. Typically, vulture funds are worldwide organisations and their tentacles of power extend across borders. Banks invariably would write from a foreign base, sometimes in a foreign language, and so were not strong in terms of their ability to chase down debt. 2. Most vulture funds are unregulated. 3. They are not in it for the long term. You may have a mortgage that runs out in, say, 10 years, but they want short-term returns on the money they've invested in purchasing these loan books. They are vigorous in their approach and attack. If you are being chased by a bank, you may have received a letter, say, every 6 months. Vulture funds have a strong legal representation and will chase across jurisdictionally, usually employing very aggressive city-based solicitors. But they are overtly commercial, and that in turn gives an opportunity for us at EU Property Solutions to achieve excellent settlements for our clients. Our job is to create an argument with such vulture funds to slow them down so they can consider the merits of your position in the UK typically, so we can look at some form of defence. We often say it will not win a war, but it does slow down these aggressive vulture funds. Then we can drive to an affordable settlement that suits your means and needs. A recent example saw us settle and save a client over €412,000 in Cyprus, even though that vulture fund had started legal proceedings in Cyprus. Finally, I availed of Google and checked out the definition of vulture funds, and they are described as birds of prey and scavengers. That's a very short take in terms of vulture funds and loan sales, but the main point to acknowledge is that it is a completely different game, and it is vital that you take action as soon as a vulture fund is appointed. The solicitors they appoint are fee-led animals, and they will drive a case in whatever direction suits that agenda. So, as ever, take action and call EU Property Solutions.